The Dow Jones finishing the week down more than 300 points.
When banks experience financial losses, it is and should be a matter of concern.
Tonight, a bank has been seized by state and federal regulators. This is the biggest bank failure since 2008, and this evening, so many customers demanding to know,
where is our money? Where is our money?
This bank, the Silicon Valley Bank, a favorite of the tech industry. Customers today rushing to withdraw their money, finding branch offices closed and ATMs not working.
It's the biggest bank failure since the 2008 financial crisis. Regulators this morning shutting down and seizing the assets of the bank, a go-to lender to the tech industry. Many of those businesses today cut off from their cash.
I hope we get most of it back, but yeah, it's definitely a concern.
It all came crashing down in just 48 hours. As the bank tried to shore up its finances, the panic only spread on Wall Street. The bank's stock plunged and customers started pulling their money out.
Once that happens, it's just inevitable it's going to fail.
High interest rates have left many tech companies with less cash on hand, forcing them to withdraw more to meet their expenses.
The collapse of Silicon Valley Bank is causing shockwaves across the entire business world.
With the FDIC now in control, customers can access up to $250,000 on Monday. But as ABC's Jacqueline Lee explains, that's not enough for many companies left struggling to manage their finances.
Silicon Valley Bank, the nation's 16th largest bank, was shut down by the FDIC on Friday after depositors hurried to withdraw money amid concerns over the bank's health.
All our money is in the bank. I don't know how we're going to do our payroll.
Not well known outside Silicon Valley, the bank's customers are largely in the tech and venture capital space, with branches in California and Massachusetts. The bank did business with companies like Shopify, ZipRecruiter, and Pinterest. In a SEC filing, streaming provider Roku said it had $487 million, or 26% of its cash reserves with the bank.
How concerned are you that we could see a ripple effect just throughout this specific sector?
I just want to reemphasize that we are in a fundamentally different position, that with the reforms of the global financial crisis of 2007, 2008, we've put in place stress tests and other tools that our regulators have to provide more resilience to our banking system.
26% of its cash reserves with the bank.
The company saying their deposits were largely uninsured. Adrian Mendoza runs a venture capital firm in Boston.
Dollars were being pulled faster than the bank actually had.
According to the FDIC, Silicon Valley Bank had approximately $209 billion in assets and $175 billion in deposits at the end of last year. The bank's collapse rattled financial markets, the Dow Jones finishing the week down more than 300 points.
When banks experience financial losses, it is and should be a matter of concern.
The FDIC, along with the Treasury Department, say they have a process to deal with bank failures like this, insisting the banking system has been shored up since the financial crisis 15 years ago.
They have very good risk management since the financial crisis because of changes brought after the crisis. So I think the banking system is probably as strong as it's ever been.
And it's important to note the FDIC is insured up to $250,000 per depositor. The FDIC announcing all insured depositors will receive their money no later than Monday.